What's up, everyone? Another video here. This is Sean Rampersad with the LendRamp Mortgage team at TMG, the Mortgage Group. Today, I'm going to be talking to you about a topic that is on everybody's mind, especially right now in 2023. There's a lot of things going on with the interest rates. We are going to be talking about the variable rate versus a fixed rate mortgage, and which one is going to be the most beneficial for you at this time. Okay, and that's very important to know if it's beneficial for you specifically. So first of all, what is a variable rate? A variable rate is also called an adjustable rate mortgage. And basically, it's a mortgage where the rate fluctuates with the prime rate. So Canada and the US, they both have something called a prime rate. And the variable rate will go up when the prime rate goes up. So the prime rate is the Bank of Canada, for example, is the one that runs it here. And the variable rate will go down when the prime rate goes down. So that's what a variable rate mortgage is. And it has been hugely beneficial to a lot of people over the last 20 years. But right now it's a little bit high at the moment, and it is something that fluctuates like the stock market. So you'll see that go up and down over time, and you have to know if you can handle that or not. What I do tell people is, if you are a low risk investor, like you want zero risk, then you should not be considering a variable, okay? If you are a mid risk investor, then I would say, okay, you can consider a variable rate mortgage, because you're going to be fine with it going up and down, and you may have the mentality that it's going to average out lower anyway. So myself, for example, I am a mid-range investor, and I do go with the variable rate quite often on mortgages, just because it usually is cheaper than the fixed rate, okay? So let's get right into it. What's good about the variable rate? So first and foremost, it has a 3-month interest penalty, okay? The fixed rates have a very high penalty if you're trying to break the mortgage. So, for example, if you're buying a house with a girlfriend or a boyfriend, and you don't know if this relationship's going to last, if you're going to have to sell the property in the near future, who knows? Then I would consider a variable rate, because the penalty is very small on a variable, okay? That's one reason why I would consider a variable. Also, if it's a shorter term that you want the mortgage for, or if your house is going up for sale, but you're not desperate to sell, it could take a year or two to sell the property, then you would consider a variable rate, because it still gives you a good low rate, whereas an open mortgage, for example, is usually a very high rate. The variable rate's a great option there. Second of all, it's historically lower than the fixed rates. So right now, I know the variable rates are higher than the fixed rates, but historically, over the last 25 years, the variable rate has been lower than the fixed rates. Okay, so that's another reason that you may want to consider going with a variable rate. The payment could be lower because of the variable rate, and you may also qualify for a higher amount if you get a variable rate mortgage. So that's another massive benefit of dealing with of getting a variable rate. One of the cons of the variable rate is it does go up with prime. So if the prime rate goes up, which it has for the past like 3 or 4 quarters in Canada, then your variable rate mortgage will go up, okay? If your rate goes up, you have to lock in at today's posted rate. So when you're getting this variable rate mortgage right now, your mortgage broker may not be telling you this, but if you do decide in a month or two that you want to go like with a fixed rate and lock in, you could do that, but you're not getting the bank's best rate. You're getting their posted rate, okay? It is negotiable, but the banks are less likely to negotiate because you're already in a mortgage with them and you kind of don't really have a choice. So for the most part, you want to make this decision very early on in the process, whether you want to go fixed or variable, because you don't want to be stuck with the bank's posted rate, okay? What are the pros of the fixed rates? Okay, so number one, obviously you get a set payment for the entire term. Okay, this creates obviously stability, and you know what's going on at all times. You know how much principal you're paying and how much interest you're paying. You know how long it's going to take for you to pay that mortgage off. So that's a major benefit of it. What are the cons of the fixed rate? Okay, so one of the cons of the fixed rate is it is normally higher than the variable. It's not right now at this given time when I'm filming this video, but for the most part, the fixed rates are usually higher than the variable rate. Okay. Fixed rates also have a higher payout penalty. Okay, so be aware of that it's a lot higher. Okay, it's called an interest rate differential, and I'm gonna do another video on that just so you know what it is and what it costs to get out of it. Okay, and then you're also stuck with that rate for your entire term unless you pay a penalty. So that's another pretty big negative about going with a fixed rate, is that it is what it is for the entire term. Nothing's going to change. Okay, who should get a fixed rate and who should get a variable? Okay, so like I said before, I want to summarize this again. If your risk tolerance is 0, then you need to get a fixed rate. Okay, if you don't want to take any risk, you want to know what your payments are, you want stability, then get a fixed term. Please don't let anyone convince you anything else otherwise, because people will try to convince you of all kinds of things and everybody has an opinion. I'm telling you right now, if you have a 0 risk tolerance, go with a fixed term mortgage right now. Okay, if you're looking at a person who is a mid-risk or high-risk person or high-risk investor, you know how when you walk into your bank, they ask, are you a mid-risk or a high-risk investor? If you're a mid-risk or a high-risk investor, then a variable rate could be a good fit for you. Okay, right now it's a very odd time in the mortgage world where a lot of the mid and high-risk people are just doing a shorter term mortgage, and doing a fixed term because no one knows where the variable is going. Everyone's a little bit leery about the market right now. So just be aware of that. Call me if you do have any questions and let me hash it out with you. I've done a ton of videos and a ton of articles about the benefits of one versus the other, but I'm happy to walk you through it. Okay, I'll leave my number and my email address in the comments below just so you have that. But feel free to reach out anytime. If you enjoyed my video, please do me a favor and like the video itself and subscribe to the channel. It helps me come out with more, sometimes better content, because I want to keep on educating people and keep on giving you the good information you need to make a wise decision. If you do have any questions, please call me. My number is 780-278-4847. If you have a mortgage or have had a mortgage in the past, please let me know if you had a variable or a fixed in the comments below. So comment variable if you love variable, comment fixed if you love fixed. And people will be able to use that as a resource on how they can make their decision themselves. Again, thank you very much for your time. Call me if you have any questions.